So we got our second press release about divestments from CloudMD. So I'm going to go through the press release for the two pharmacies that were divested in British Columbia, and then we can take a look at the company overall using the Q2 MD&A, and then see what pieces are no longer part of the company. And then we can make some projections or estimates on what the company will look like going forward with the enterprise health services, digital health services, and clinics and pharmacy businesses. So those two clinics, as previously mentioned, were sold to Neighbourly. The company got a little under $4 million from these. So when you combine that with what was sold to Well, they have a total amount of cash received of about $9 million. So that completes pretty much all the Western Canada divestments that they're going to have. So the company's largely down to their enterprise health solutions and digital health solution businesses. There's just the Ontario businesses that have not been totally sold off under the clinics and pharmacies. We'll take a look at that under the business section of digital health service or clinics and pharmacies in their MD&A as I review that. Last sort of few things I wanted to highlight on the most recent press release was the $9 million that they got can be deployed for growth, but they don't mention both business divisions. They just mention deploying that money in the enterprise health services division. And then reading through the About Company section, it seems quite clear that the digital health services is definitely a second tier or second part of this company, and it's the enterprise that is going to be the large value of the company. We don't know how they're going to use this money in terms of organic growth versus making acquisitions. Either one could lead to revenue growth. Last bit, just in terms of our modeling, this should complete in the fourth quarter of 2022, so we can take out any revenue from what's sold in Q1 2023 projections. So just before I go into about the company and see what's been sold and predict the future, where will they be cash-wise at the end of Q4? So they had about $30 million at the end of the second quarter. They're going to get $3.2 million from the Vision Pro settlement, and now between Well and the Neighbourly acquisition, they're going to get about another $9 million in cash. So they're going to have $42 million in cash at the end of the year, less whatever their cash burn is between Q2 and Q3. So they should have north of $40 million at the end of the year. So they're in very good shape cash-wise. They're definitely not going to need to raise money unless they do some sort of serious acquisition, which has never been mentioned or hinted at. Where they are in terms of their previous Q2 revenue, so this is the most recent financials that we have. Enterprise Health Services is about $25 million, so this should continue to grow, hopefully organically at least 10%. The clinics and pharmacies should drop not to zero, but it shouldn't be very large. Again, there's just some Ontario businesses left. Not sure if they're going to keep them or sell them. In previous videos, I never really factored in a decline in the digital health services. And I'm going to factor in a decline in revenue in this business now, factoring in what's been sold. So this $40.3 million will be lower in the future. So looking at the business at the end of Q2 and sort of scratching off the pieces that aren't there, I'm going to very quickly run through the about us or about the business in the MD&A. Before I do, and to aid us in sort of knowing what has been eliminated, just quickly taking a look at what was sold to Well earlier the previous month of October. They sold their electronic medical records and clinics in BC. Get a little more specific on the next slide. So we've got the Richmond and South Surrey clinics are sold, as well as Juno and the Clinic Aid software. Okay. They did retain ownership of the online patient portal and My Health Access, so we have to not eliminate that when we look at their digital health services business. So looking at about the company, this is a great read. I would encourage everybody to take a look at this. It very clearly outlines the business. The three segments as of Q2, the enterprise health, the digital health, and the clinics and pharmacies. Okay. And then the About the Company section goes through several pages about the enterprise health services. So they finish page 6, page 7 of the MD&A is all about enterprise health services. The bottom of page 7 and then on to the next page. The top is about the enterprise health services, and I never really paid attention to this until rereading this document. The digital health services is just one page of the About Me as the company describes itself. So, that's re-emphasizing the importance of the enterprise health services and not putting emphasis on the digital. Okay? And again, Karen Adams clearly said that the money would be reinvested into the enterprise health services. Looking at the segments, products and services, none of the enterprise health services businesses have been sold, and that's the core of the company. So that's what they go through next in the MD&A. Okay, all of these pieces still here. I'm not going to read through them all. Then we get to the digital health services. Okay, again, this is their description in Q2. Okay, so what's gone? The Clinic Aid and Juno was sold to Well. Okay, My Health Access is staying. That was mentioned in the current press release, in the Well press release. IMD is a big part of the company, and the Vision Care is staying in the company. So most of the digital health that we now have to model, this Clinic Aid and Juno is going to cause a drop in revenue. Okay. Now the Vision Care, which would be Vision Pros, I've always thought was kind of a separate section of the business, or I didn't see how it makes sense. I was kind of going through this document looking for how it fits in, and the only sort of hint I get is the last line talking about the Vision Care business, that enterprise health services uses technology to support insurers and organizations that deliver contact lenses to employees. So there's this connection to the enterprise health services with Vision Care. So maybe that's more important than I realize, and is why having Vision Care is still worthwhile to the company. There's never a mention of selling it off. I've kind of been thinking maybe that's something that would happen, but clearly I'm wrong and don't appreciate the full value of that business. Pharmacies and clinics, the last section. So the British Columbia clinics were sold to Well. Ontario clinics, we still aren't sure if they're staying or they're going. Under pharmacies, we have the two BC Vancouver region clinics now sold. Okay, so it's just what's going to happen to Ontario that's left. Okay, so I'm just weighting clinics and pharmacies 0 in any of my modeling going forward. Eventually I'll put in whatever little piece is still there from Ontario, but it really, I don't think it's going to affect any of our modeling and calculations. So where does this leave us with CloudMD and going forward into next year? So I have been using a 10% growth rate, which I really hope accelerates, but that's a hope, not something I model. The clinics and pharmacies, I intend to just leave at 0. I have a question mark in here. Maybe there's $1 million of revenue or something to be put in there. The digital health services, I'm leaving blank in my model now instead of trying to guess. I'm just going to leave it out and value the company without it. Is there 3 million? Is there 6 million left? What is Vision Pro is going to do? I'll put that back in, but I wanted to build sort of bottom up of what I have great confidence in instead of making a guesstimate. So where that leaves us, the market cap of the company is in the mid 60s using 23 cents. As of November 1st, it's a penny or so below that. They have 42 million in cash, or will have 42 million at the end of the quarter. So this company is largely cash. If you look at the actual value of just the operating business, it's only about $25 million. Okay? So their enterprise value is really quite low, is maybe 35% of the company. So if you're not used to this term enterprise value, if you bought the company, how much would the actual operating part be? So if you spent 67 million to buy the whole company, you're getting 42 million right back in cash. So you're really just paying 25 million after you get that cash back for the company. So the price to sales ratio for next year, using my numbers, is well under 1 at 0.63. And again, I don't have any digital health services revenue in there. So this number is really lower. The enterprise value to sales is at a quarter, and again, it's really less than that. So the company's incredibly cheap at the moment. Really not a recession worry going forward. They've got lots of cash. The downsides are how small they are. Okay. Anybody big can't buy them because they're not going to move the needle. A $2, $3, $5 billion company isn't going to buy them. Their revenue is too small. It should be 100 million plus, maybe 140 as a guess off the top of my head next year, putting in some digital health services revenue. Okay. So that's not worth it to most companies. So they're a small company, and then this growth really needs to go up. Hopefully that can go into the 15 to 20% range. That would make this company a lot more attractive to me and probably to others. So currently I'm a hold on my about 60,000 shares of CloudMD. Don't intend to pick up any more. They're cheap, but in the world we're going into, it could stay cheap for a long time. And when I say the world we're going into, until the U.S. Federal Reserve and Bank of Canada backs off on raising rates, there's a likely recession coming. Now, I do feel good about the company with the amount of cash they have to get through a recession. So hopefully the next conference call I can fill in and get rid of these question marks and have a little bit more of a little more certainty on the quarterly numbers. So hopefully we'll get that around the end of November. Last year their Q3 earnings were on the 29th, the 29th is a Tuesday this year. So hopefully that last week of November, first week of December, we'll get their earnings and get a lot more clarity, particularly on what's going on with digital health services. Again, the Ontario clinics, it'd be nice to know, but I don't think there's a lot of value there, value in the clinics and pharmacies. So hopefully you found this video interesting. Please subscribe if you want to keep getting these videos, and if you enjoyed it, please like it.